Let's just dispense with the caveats, the hedging and the qualifiers and plainly state that Elon Musk is a fraud and that the Tesla story continues to unravel. Less than 3 weeks after tweeting out in the middle of the trading day that he was considering taking Tesla private at $420 a share and that funding for such a deal had been secured, we now learn that around 11 p.m. on Friday the 24th of August, Musk has magically changed his mind. Yeah, you know all those arguments about how taking Tesla private was the best thing to do so Tesla could concentrate on the business rather than petty distractions like quarterly reporting and multiple SEC investigations. Well, it turns out not so much. In a blog post on the Tesla site, Musk outlined the reasons. Based on all the discussions that have taken place over the last couple of weeks and a thorough consideration of what is best for the company, a few things are clear to me. Given the feedback I've received, it's apparent that most of Tesla's existing shareholders believe we are better off as a public company. Additionally, a number of institutional shareholders have explained that they have internal compliance issues that limit how much they can invest in a private company. There's also no proven path for most retail investors to own shares if we were private. Well, that's interesting because when Musk was asked about this on Twitter straight after his announcement, he seemed very confident that retail investors could be accommodated and that there was a proven path. My hope is all current investors remain with Tesla even if we're private. Would create special purpose fund enabling anyone to stay with Tesla. Already do this with Fidelity's SpaceX investment. But that's Musk in a nutshell, consistently making confident-sounding statements when in reality he's either got no idea what he's talking about or just flat-out bullshitting. Although the majority of shareholders I spoke to said they would remain with Tesla if we went private, the sentiment in a nutshell was, please don't do this. I knew the process of going private would be challenging, but it's clear that it would be even more time-consuming and distracting than initially anticipated. This is a problem because we already must stay focused on ramping Model 3 and becoming profitable. We will not achieve our mission of advancing sustainable energy unless we are also financially sustainable. That said, my belief that there is more than enough funding to take Tesla private was reinforced during this process. Your belief there was more than enough funding. So you just admitted then that funding secured was in reality a bald-faced lie. I mean, the tweet didn't say, I believe we can get the funding to take Tesla private at $420. It said funding secured. Perhaps in Musk's Ambien-addled brain, those two statements are the same, but I doubt the SEC will see it that way. Even one of Musk's biggest cheerleaders, Gene Munster of Loop Ventures, was quoted by Bloomberg as saying, what Musk wrote Friday night contradicts everything he tweeted earlier. Come on, Gene, it's not that hard. Just say it. He lied. And surprise, surprise, the special committee of the board of directors of Tesla agreed and backed their savior-in-chief. The board and the entire company remain focused on ensuring Tesla's operational success, and we fully support Elon as he continues to lead the company moving forward. Actually, it's more like the Tesla board are suffering from Stockholm Syndrome. They have to back him at this point or the whole house of cards will come crashing down. I think Jim Chanos's prediction that Musk will end up moving over to SpaceX is becoming more likely, just not until they can find a credible replacement. Now, of course, all the Tesla lemmings that ran around praising Musk's decision to go private and the benefits that would bring will no doubt now be praising Musk's decision to keep Tesla public. For some, it doesn't matter how big the lie or ridiculous the claim. If you belong to the cult of Elon, everything he says is pure genius. And besides, as I'm repeatedly reminded, the Model 3 ramp is here. Tesla is now producing 6,000 Model 3s a week. Or are they? Reports have been circulating for a week now that the main Model 3 production line has been shutting down early. Employees assembling Model 3 vehicles at Tesla's Fremont factory on the GA3 line were sent home early from shifts this week, 3 Tesla employees told Business Insider. One factory worker said the GA3 line, which is the main assembly line for Model 3 production, was sent home early on Wednesday without meeting goals. The worker said roughly 211 Model 3 sedans were assembled before workers were sent home 3.5 hours early from their typical 12-hour shift. The employee said that the company aims to make 300 Model 3 vehicles per shift on the GA3 line. In early July, Tesla CEO Elon Musk sent out a company-wide email celebrating the Fremont plant hitting the 5,000 cars per week benchmark and saying the factory was on track to raise that figure to 6,000 cars a week. The workers said the email was laughed at as the GA3 line has rarely hit its benchmarks. Tesla declined to comment on whether GA3 line workers were being sent home early and about internal targets for the Model 3. Well, what's a few shortened shifts between friends? But another article from Business Insider a few days ago cast more doubt on the production numbers. Internal documents reveal the grueling way Tesla hit its 5,000 Model 3 target. Of the 5,000 Model 3s that contributed to Tesla's end of June manufacturing target, about 4,300 required rework, according to internal documents viewed by Business Insider. Within the auto industry, cars that make it through a manufacturing process without requiring rework are part of a factory or line's first pass yield, or FPY. That means the Tesla factory had a first pass yield for Model 3 vehicles of as low as 14% during the last week of June. An industry expert told Business Insider that good auto plants have a first pass yield of about 80%. So Tesla is producing 5,000 cars a week, most of which need rework. Wow, I wouldn't have guessed that given you're assembling cars in a makeshift tent. And as this article in Forbes on Saturday noted, a casual perusal of Twitter and various Tesla owners' forums show large numbers of complaints from customers about cars not being ready for delivery at scheduled appointments or being delivered with a range of defects that were promised to be corrected at a later date. Other reports, including photographs and drone video, show thousands of cars sitting in storage lots at various locations around California as they await repairs. That same article goes on to note this tweet from Musk related to the announcement to remain public. In talking to our public investors, most were supportive of optimizing for long-term value creation over quarterly earnings. This was also a factor in remaining public. The Forbes article then goes on to say, from this, we can likely infer that the previous guidance about being profitable and cash flow positive in the third and fourth quarters can be disregarded now. So the theory put forth in this article is that Tesla's profitability claim was predicated on previous reports claiming that Tesla had tried to renegotiate with suppliers, including price cuts, extended payment periods, and even refunding previous payments. Now, I don't know if profitability was predicated on suppliers agreeing to all that, but if it is true and Tesla doesn't live up to guidance in the third quarter, the share price is in for some pain. And yes, I'm still short with my long-dated put options. So to recap, I think Morgan Stanley and Goldman Sachs took one look at Tesla's financials and knew straight away there was no way in hell a deal to take the company private at any premium, let alone $420, was doable, and thus they're better off staying public and raising capital, as they are likely to continue bleeding cash. That would be the smart option and perhaps the only option. Now, some have suggested that Tesla can't raise capital because of SEC investigations. I'm not a lawyer and I don't play one on TV, so I can't comment on Tesla's ability to raise capital. But even if they can, we've just gone from a potential $420 a share deal to take the company private to a capital raise that will have to be done at a discount to the current price. Now, I'm sure the cult of Elon will be able to spin that scenario as a positive, but I'm not so sure the market will see it in the same way. But then again, nothing would surprise me given the total shit show that is Tesla. I'll see you next time.